Welcome back to the Brent Bruce Daily. Today we are going to show you why you read reports, because the headline number that came out today was wonderful, but when you look further into it, you go, oh my gosh, not a good number, okay? And the market reacted exactly that way, and I'm going to show you, you can almost see the market reading the report, going from the headline number to what it actually says, and watching the changes occur in the Dow Jones Industrial Average especially. Let's do this very quickly here, but these reports you watch tonight when you hear about what a great report just came out, all right? And then you're going to go to your spouse, friends, or family. You're going to go, oh my gosh, you see that report? Let me tell you what really happened in that report. I'm going to show you right now, okay? So let's jump over here, first of all, to the report itself. If I can get my screen switched over here. This is a chart that's put out by the MBS Highway. The great people of MBS Highway always make it easy for us to illustrate what's going on. The Bureau of Labor Statistics job report comes out once a month. It is usually the first Friday of the month. There's two facets to this report. There's the business report and the household survey, business survey and household survey. So they survey businesses and they survey households. The business survey is usually the number that you're going to hear about in the news. Shows a 315,000 gain, which is at the high end of the estimates. Now, remember, for the last 2 months, I have been wrong in my estimations. But it turns out I wasn't that wrong, because they just made a revision to the past 2 months that changes it down 107,000 jobs. That is a big difference. It's interesting how they can just make a change like that. And 100,000 is not really like an easy thing to miss. But okay, so we're going to move on to the household survey. Job creations come in at 442,000. Again, it's a different survey, different number, but both are very strong. 442 is a great number. Oh, wait a minute. So these are the numbers that the stock market sees, that the bond market sees when the report comes out. Then they open the book and they start reading. Come to find out two things that are certainly kind of important. First of all, 363,000 of these 442,000 jobs are for people ages 16 to 19. This is going to be somebody who is in an entry-level position at best, if not just a summertime job. This is not what we're looking for when we talk about job creation and strength in the economy. It's better than nothing. I'm not trying to, put it down, but it's not like these people went out and found careers, not just yet, all right? There's some more numbers here that we're not going to get into about total labor force actually going up. More people went to work than did last month. Why is that? Probably because they need to make more money in their house, right? Because of inflation. So more people that didn't used to work are going back to work, as well as birth rate. So let's take a look at this other report here. Another piece of information that might be important to know when you're looking at this blockbuster report that you're going to hear about today in the news. Oh, okay. Well, there were some pockets of weakness in the August numbers. For instance, full-time jobs fell by 242,000 jobs, while part-time jobs gained 413,000. Doesn't that kind of match up with the numbers that we just saw talking about the ages of 16 to 19? Doesn't that seem like something that you might want to actually mention when you talk about having a strong jobs number, that most of those were people who either started part-time jobs or were actually pushed from full-time jobs to part-time jobs. All right? Not good. Now the market, look at the market. Watch as they read this report. This is today's chart for the Dow Jones Industrial Average. Report comes out. All right, good numbers. We go up, 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 up. Everyone's having a great day. Oh, let's start to read about the fact that most of this is for part-time workers, and we lost hundreds of thousands of full-time workers, and now we're having a terrible day, down 337 on the Dow Jones. How does the home loan interest rate market like it? Well, when money moves out of the stock market, it usually moves into the bond market, and bad jobs reports are good for home loans. So the mortgage-backed security market is having a good day, up 30 basis points. I mean, we haven't really had a bunch of up days since the August 16th Inflation Reduction Act. We're having a good day. We bounced off this floor of support that was so important yesterday. We were worried about breaking below this floor of support and going into the mid 6% range on our Brent Bruce Daily. We've bounced off of that, and we hope to run up and start battling with these ceilings of resistance. What does that mean as far as our mortgage-backed security? Our home loan interest rates. Let's take a look at the Brent Bruce Daily scenario. Again, we are up 30, so we should see some improvement. And we also talked about yesterday that the banks were handicapping themselves, getting ready for the report that they did not know how it was going to come out. We could see the indecision of what they expected in today's report. That's why they pushed home loan interest rates up so high yesterday, meaning maybe another 1/8%. Today, we're at 5.75%, but we have a pretty large credit. Let's open this up, and we will see that we can be at 5.625 for $518. Not that big of a cost to get to 5.625. That is a big difference, 1/4% from yesterday. I think we were just getting a little bit of a credit at 5.875. So there's been some good movement here because, number one, the banks are feeling more comfortable about knowing what the BLS report says. And also, we've had a good day in the bond market, in the mortgage-backed security market. Our 4.99, look at, we're under 2 now. Remember, we were, I think, at 2.3 yesterday. So we're back under 2. Hopefully, we're going to claw our way back to where 4.9, 4.7, 4.6 is the no point rate. Look at the difference. 390 basis points, 3.91 points more expensive. Because remember, we were at 4.625 with no points a while back, right? When was that? Let's take a quick look here. That was here, August 2nd. 1 month ago, to the day, we were at 4.625. Today, we're talking about 5.625. You can see the volatility of the market. That is how the jobs report came out today. Make sure that you like, subscribe, and share. Have a great Labor Day weekend, and we will see you on Tuesday. We will not be talking together on Monday. Have a good